Hello guys, welcome to another episode of Mali Traders. Today we're going to be talking about taking levels, ICT style. So if you know us, you know we trade ICT, smart money concepts. We've been studying ICT for quite a while now, myself and my crew over there on the Discord. So we just started a new Discord channel community so we can teach what we know. Our motto is each one teach one. All right. So ICT blessed us. ICT was blessed with this gift and then he passed it on to his community and we're doing the same. So what we do, or rather what we teach in our own way, is just a rehash or summary of what ICT teaches or what ICT have taught us. So if you want the real deal, go straight to ICT. But if you want a breakdown of the concept in a simpler, a little bit more nuanced or a different touch, you give us a shout. Okay, enough of that pleasantries. So let's go to taking levels. Now, the first thing when it comes to trading is taking levels is very important. But however, within the SMC ICT community, I haven't really seen a tutorial on this. So today I will be making a short tutorial on how I take my levels and how I get sniper entries from these levels. I am from retail. What I mean by that is back in the days when I was learning to trade, EXO charts, TL, trading lights, ATAS, all these advanced levels, all this advanced charting software, I was using it before I discovered ICT. All right. So you can say I was in the darkness. Then I saw the light. Anyway, so we were taught, or I was taught, that if you're going to take levels, you take the candle close and starting from the weekly. So I had a template for this. So template, you see, I can have if I want it to be monthly, and then it's white, and then if I want it to be weekly, I think weekly is blue. It should be, yeah, it is blue. So I customized this template based of the different levels so that when I see it, I know. I think the daily was yellow, yeah, like that. However, that is not necessarily the right way. Perhaps for retail traders, but it's kind of similar to what ICT teaches that, the weak does the damage. Yeah, the weak does the damage. But you want to take note of this body and the weak. So what I do is that is how I take my level exactly. I just pick those little things what ICT was explaining, and then I don't know if ICT ever made a video of how to take levels. I don't think he did. Don't expect him to teach everything. So I already made a little bit of a little tutorial on this part one. So now I'm making a little bit more comprehensive one. So how do you go about it? These are the things I need to take my levels. Horizontal array, rectangle box, and a trend line. Yes, fib. Yeah, we really don't use fib on ICT or SMC, but you understand what I use this for. This parallel, I don't really use it, but sometimes I can use it to highlight some, okay, we're in a downtrend or we're in an uptrend or we're in ranging markets or whatever. And then Gann box. Okay, this is my Gann box right here, and this is my fib, and this is my rectangle, and this is my trend line, and these are my, what's it called now? That thing, horizontal array. Yeah. Okay, guys, just understand I'm gonna have a couple of brain freeze here. It's already late here, and I've been trading all day. So how does it work? You go here, you just take any line, you create a template for it. If you don't know how to create a template, here's an example, a quick example. So you take anything you want, this, and you just click on it, go to settings, you choose, okay, the style is what color you want it to be. Um, let's choose this for example, okay, and text, what do you want it to be? Do you want it to be let's say ML. Okay, all right. So, oh, actually, I'm gonna create this now. It's gonna be called Mali levels. ML means Mali levels. Okay, so you create one. So when you, whenever I give a level or I say something, you just put that in. It's okay, it's Mali levels. But if you get wrecked, don't blame me. This is all paper trading. Whatever I'm doing here is paper trading, and it's not absolutely no financial advice. So you be one. So you choose where you want it. Is it in the middle? See, at the top, the bottom, there. So I like to put it in the middle, and then you want to put it, see at the right, you want to put it at the left. Comes here. I don't know why anybody want to put it there, but there you go. The option is there. If you want to put it at the middle, there. Yeah. Okay, cool. However, like everything else, I like it to be on the right side. So we just press save as. Ah, I like to give it the same title, ML, Mali levels, and then press save. Okay, and that's it. So now I just use that as an example. However, if you already have this populated on your chart, for example, or just put a new one, you just press, and you see ML, go to ML, Mali levels, yay, right there. Okay, so now I already have these levels. For example, you just take this. As you can see, if you go to my template, these are a list of my templates that I've created. This is one I just created. So I have levels for monthly, weekly, daily. So these are all the things we're going to be doing today. I have one for called ICT levels because sometimes these days ICT is doing his 2023 tutorial mentorship rather, sorry, 2023 mentorship. Sometimes he call at a certain level where he wants to point your attention to. So if I have that, I just take it. If he's saying uh, just an example, 22.0 blah 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 or whatever. So I'll just take this, meaning ICT want us to look at that level. Maybe it's a drawn liquidity, it's a sell side or buy side liquidity or whatever that is resting below there or above there. So that's how you use it. So you just take this and then you choose whatever thing you want to do. So this is range. This means range high volume node. So I have that. For example, if you want to take the what's it for using those. So this is the point of control for this. If you know how to use this tool, and these are the excuse me, I'm just gonna take away this magnet. So these are the high volume nodes, and this is the POC. So if I was using that tool, I use it for backtesting sometimes, so that is why I still have the template. And if it is a range POC, so it becomes like that. So anything you choose, just come to it. So 618 fib levels. Now, so we're gonna start by taking levels start from a weekly time frame. So I usually just take, you see, on the weekly time frame, kind of bearish or sort of consolidating. I don't really know. You make of it what you want. So the weekly time frame, I just take this, put on the magnet, so I can get. I take this like that, then I duplicate or clone it, and then I take the next one and maybe the next one right here. I don't need to go all in and get all this. It's like having a rainbow on my chart now. I didn't need to take this because price already hit this. So for example, if I had taken this, because this is a new week, if I had taken that one prior, it would have looked like this. Now you need to understand something. Why is it important to take these higher time frame levels? Because if you are on 15 seconds time frame, you'll be wondering, oh, what is that line? What is that line? Oh, I don't remember. So when you have it like this, here by the right side, on the right side, you see weekly, monthly, daily, 4 hour. You'll be like, okay, yeah. So these are my higher time frame levels. So if this was, now this is the one. So price just touched my higher time frame levels. So on a lower time frame, I'll be looking for entry. Let's see if we had any entry here. So as price came up, touched this market structure break right here in the 2 minutes time frame. Again, on the 1 minute time frame, so you probably could enter here if you're going, on the 2022 model. There's not really a good entry. You can enter in any of this if you want. Let's see if we have an OT. It's just a rough example of how I use it. No, not necessarily, but yeah. So that is how I would do it. Again, back to where we were. So now that is gone. So this is the next 2 week levels, up here and down here, right? Right. This shouldn't be here anymore. Put it right there, I think. So now I've taken the weekly. Now next thing is I move to the daily. This is where this one comes in. The purple line, just duplicate it considering depending on how many daily levels you want to take. Again, always put on the magnet when you're doing these things, so you don't miss the tip rather. So it's similar to the weekly level we did before. So now there is no need. You could decide to take this right here. So this will be your nearest drawn liquidity or here. Now, like I said, this is already taken. This daily high is already taken. So you don't need to put it. You could put this here. As you can see, we have equal high, or rather relative equal high. We have relative equal high. When you find things like this, it's often called relative equal high, but I don't consider it. I just put it on this one. This high already taking this one out. I don't consider relative equal high anymore. What I consider relative equal high is a situation like this, whereby the next high is lower than the previous high, meaning the liquidity resting above here is still intact. So there was a relative equal high here, and then this came and purged it. So when you find this situation, always mark it out. I will tell you, or I will show you exactly how I do it. So for me, this is relative equal high. This is not relative equal high. Capiche? So meaning that the next high in the direction of price is lower than the previous high. So if it was on the downside, this would be relative equal lows. However, it's kind of far, but you get the idea. You get the idea. That's just this. Why is it relative? Because they are very close to each other. So relative equal lows. We'll come to this in a while. So this is how I use my daily. I'll just put it in strategic places. For example, I could also put one here like that, because as price is coming, price is definitely going to react from this. Now, this is a very important point. I will come to it later. So those are my weekly and my daily levels. I had a one-on-one tutorial session with one of my Discord members before on how to do this. So that was like the part one. However, this is more direct and starting from the very beginning of how you customize these things, as I showed you earlier on. So now we go to the 4 hour. Like I said, it is weekly, daily, and then 4 hour. I take monthly too. As you see, I have a monthly level. So I just take that just so I know, but I don't really often use it. So I have it like this. These are really, really key points, key areas. So now let's go to the 4 hour. So this is my 4-hour time frame um, stuff here. Brain freeze. Told you, beware of that. So I will do the same here. Oh shit, I shouldn't have taken out those daily. Anyway, it doesn't matter because the thing is this, when you have your daily, now I just have to redo it. So I have my daily here, and then I have, because the areas where you already have your daily, you don't need to put 4 hour, okay? So the whole idea is to place your 4 hour where you don't already have a daily or weekly time frame, weekly level. So here you will put like that. Now you don't like I said, you don't have to put everywhere here, 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 here. Then you're just gonna populate your chart with lipstick, as ICT call them. So ICT don't use these things. Like he said, he have a system that works for him, but I like to see my levels. So I'm not ICT. So I'll put one here and perhaps one here. In this situation, you can see there is this high right here, right? It is somewhat slightly higher than this. So this is a good example of relative equal highs, like I was saying before. So this is a good example of that. And in this situation, this will be relative equal lows. And then this one just paused it. I don't know what happened here, but we got a whole cascade of dumping here. Okay, so in this situation, I will put it here. And then I'm expecting this to be pushed. If price should come there, if that is what price wants to do. So this is how I do it. And then I'll put, yeah, like I said, in strategic levels here. And no need to put in, of course, I think you already know this. No need to put in any of this because price already passed that. So you're looking for the next area of liquidity. What you're doing, in essence, is that you are marking out liquidity. Okay. According to ICT, price is only after two things. Don't complicate this, okay? Price is after two things. They're looking for highs. Liquidity is resting above this point, and they're looking for lows. Liquidity is resting above, oh sorry, below this point. So here is a classic smart money reversal right here. Market maker buy model. We'll be talking about that a lot. We use it a lot in our Discord and our channel, and yeah, we always talk about that. And so you're looking, price is coming for these stops, or is filling imbalances, which is this place, this gap between this and this, the fair value gap. If you don't know smart money concept or ICT, most of what I'm saying here is probably useless to you. So this is not a tutorial of ICT concept. This is a tutorial of how I take levels, ICT style levels. All right. So don't judge me on telling you the wrong thing about other blogs and whatnot, because that's not anything I say here just in passing. May or may not be correct about the concept, because this is not a tutorial. This is about taking the levels. If you want to learn about the tutorial, the place I recommend you start is ICT. Go study this 2022 model. All right. Now, if you want a simplified version of that, then you give us a call. Sorry, not a call. We do that. We talk a lot about that. We teach that in our Discord. We started the Discord is for beginners and professionals alike. So we're sharing levels and doing everything there on a daily basis. So that's for my 4 hour. So I will just cage it like this. Now caging the price in between the 4 hour, between the levels. So price, if you go to a lower time frame, you see that it's sort of like ranging. Yeah, it's consolidating. And then if you're looking for entry, there you go to the smaller time frame. And then if you want to scalp the range, you just do that. So like I said, this is what this may be for. You may want to draw this out like that. Say, okay, yeah, we are ranging. So price is ping-ponging between these. So you can just scalp the range if that is what you do. But that is not what we do. We don't do retail ping-ponging like that. We don't do that stuff. Again, everything here is just a tutorial. And whatever, if you use any of this, it should be on a demo account, okay? We're not teaching you how to trade with real money here. We'll never teach you how to trade with real money. If you're going to trade using any of our teachings or any of our lectures, it's on a paper trading, monopoly, money, those stuff. So weekly, daily, 4 hour. That is what we do. So now let me take you to this. No, not that. If you go to my okay, this is my Bitcoin. This is how I no, not there. It's not on that one. If you come here, you say this is an example of how I take my levels right here. You see the weekly time frame. So this is how we traded this right here. So this was taken way back. Boom, right there. Off you go. So when this happens, when it goes into our higher time frame levels, we go to work. Price is there, price is coming there. So you just apply basically your 2022 model, right? Like I said, this is I'm not going to teach you how to do any of all that. That is not what the tutorial is about. Point is, when you're on this lower time frame, you are longing or you want to buy on a higher time frame level. This is not a 15 minutes level or 3 minutes level like this or like that. So you are working with a higher time frame PDAs. So that is just an example of what happened when you start if you know how to take your levels, right? So that is how you apply your monthly, weekly, daily, and your 4 hour. Again, if you look, you will see my 4 hour right there. I haven't updated it today, then I would have marked this out. For example, I could just take this, clone. So this is how I update my levels. I just put it like that. Take this, turn it to 4 hour. Nice there. So this is what I do. So before I go to bed, I will go through my pairs and update them. Locate where the nearest pool of liquidity is, then I go to bed and see what happens. And then every Friday after the market close, I will take levels again, something I call extra levels. We'll talk about that in a while. These extra zones, we'll talk about that in a while. So now you know how to take your level up the way to the 4 hour time frame. Okay, so now I'm just going to remove this shit. So let's go back to the other tools. What was it? Where we are on the weekly time frame. So now we have this. We have the rectangle and then we have the trend line. So if you click it, you can see. Let me move it up so So if you click it, you see these are the templates. Now, what I use this for is to highlight buy side liquidity, consequent encroachment, equal high liquidity, equal low liquidity. I also have an ICT. Apparently I have this. And then IOFED levels, institutional order flow entry drill, liquidity grab, SLG, market structure shift, order block, SMT, CESA liquidity, structural support and resistance. That's what this means. And trend line liquidity. This trend line liquidity is actually made up of stuff. This is not really, but anything like trend line liquidity. ICT never mentioned that, but I just like, I've seen it around, so I put it there. Now, I'm going to remove this and then I'm going to bring them up again so you understand how I do it. So I'll go to a daily time frame. So this daily time frame, usually I will take this. This is, I can move this magnet, and if I need a couple of them, I will just duplicate them. Where's duplicate? Yeah, or not copy. So I can as well just paste it. Either you copy or you clone it, right? So what do I want? So these are the these are the levels that you need to take, or rather that you need to keep uh, track of. This balance price range, a breaker, it could be a bullish or bearish breaker, daily order block, daily volume imbalance, fair value gap, 1 hour fair value gap, 15 minutes fair value gap, 4 hour fair value gap, daily fair value gap, gap imbalance, golden pockets. Yeah, it's from when I was doing retail stuff. Implied fair value gap, mitigation block, new week opening gap. This was before I created uh, my indicator. Okay, for I call it ICT gap indicator. It measures, yeah, the indicator measures new week opening gap and new day opening gap. 1 hour order block, 4 hour, 15 minutes OT, relative equals, rejection block, volume imbalance, weekly liquidity grab. Now, do you need all this? No. Do I need it? Yes, because it just makes things easier for me. All right. So if you're on a lower time frame, you want okay, what liquidity grab, a higher time frame liquidity grab do we have? Liquidity do we have? So you just, let's say you put that, and then it says blue. Anytime you see blue, it's liquidity. For example, if you go here, I could say I could take this. Gosh, it's annoying. So you could just put it like this, or yeah, something like that, and pull it all the way, so that later in the future, when you're in a 1 second or 2 seconds time frame or whatever, then you know, okay, this is a weekly levels. Sometimes you could also, you will find other things within this level. So of course you should also have had this there, you know but I don't, this weekly liquidity grab, I don't really use it often, but I just created it. Then that's for that. Take it away back to the daily time frame so we have a better view of what we're doing. This, you have balance price range. Again, I'm not here to teach you all this concept. If you know what to do, then you know. So you can just take it and then you pull it, and then you know what you are working with. You put it where it is. You know what you're working with. Okay. So you have to know what the balance price range is to be able to use it. Then you have, of course, your other blocks, and then you have your mitigation blocks. As you can see, they've all been customized with different colors and different text colors. Now, relative equals. You remember I said something before about relative equal highs and relative equal lows. If I measure here daily, I measure here daily. For example, this is a daily time frame. Daily, let's just call it resistance level. So if I put another one here, I mean, it just become kind of, I like a clean chart. It just, if you like this, it just gets kind of messy, right? So I usually have this. I call it relative equals. I didn't need to create two, one for relative equal highs and one for relative equal lows. No, I just call it relative equal. It can be on the top, it can be on the bottom. You just let me know that there are multiple liquidity area in that zone. So if you zoom in like this, you can see that, okay, it sort of disappear, but when you see that box, you know there is something there. So you just zoom out. Alternatively, I do this sometimes. I just go back to settings and then I change the location of the text of the title, right? It's inside now and then it's at the right. So it can still be at the right, but I decide to put it top or bottom, okay? If price is currently here, I would like to put it at the top because I'll probably have that thing at the bottom. So I just put it there like that. So no matter what I zoom in, or if I go to a smaller time frame and then I zoom in and that this box is not visible, at least I can see this. So that is how I use it. So if you see it on my chart, that is what it means. So I can use it here, assuming I don't want to draw two lines there. So I just know this zone is relative equals. So that is how I use this. Again, it has a lot of uses, okay? Volume imbalance, it has a different color. You see GIB, it has a different color. And then I have RJB, rejection block, similar to gap imbalance, I think. So now comes to something you need to understand about levels. You see, you remember I mentioned something before about the body closes and opening right there. It's nothing bad taking these levels here. But what I do is this, okay? This is what I do. I take my level here and then I take a box like this. It's called rejection block. If you know ICT concept, again, you will know what this means. So this is the rejection block, or rather this is my rejection block. I draw this. Now I have a daily inside the rejection block. So I'll be expecting a price to react. I will be expecting price to react to this level. So this is how I use higher time frame, buy side or sell side liquidity together with my rejection block for my analysis. So that is how I use rejection block. Now, what does rejection block do? This is a good example here. You see, before price touches this place, you would have already taken this. Put my magnet on again. You would have already taken this daily sell liquidity right there. Okay. Sometimes price does not take out the low, but price will tap into the rejection area because you could be waiting for the lows to be taken, meanwhile price will just come and do that. But in this case, price took out the lows, So, hooray. But now let's see if we can find other situations whereby the lows or the highs were not taken out, but price still came into that area nonetheless. This is a good example. You would have marked out this high, probably this high, probably this high. You're waiting for price to come and take it because you hear that, oh, okay, price is going after sell liquidity on the low and buy sell liquidity on the top. So, okay, now we're pumping to the moon. Yeah. Come on, guy. Bro, don't be a Carl. Don't sit there and start yelling to the moon. Then you get roasted. So if you had your rejection block like that, so you would put it like that. Something like that. Simple. So when price, you will usually put your alerts. You see, I have alerts everywhere, and now this is kind of wonky over here, but if I were to do this, I would put my alert just before at the start of that rejection block right there. So as soon as price is hitting my AVAX here, I'll be alerted. Now price range here within for 3 or 4 days before moving down. So if you go to a lower time frame, let's see what we can find, why these levels are important. So now you can see that price was ranging around there, that rejection block. It didn't really make any significant moves, so it was really weird. You'll probably be scalping this, but if you had entered here and put your stop loss somewhere above here, you would have been safe. All along, price was just doing this before it finally went down here. So these days, I don't trade crypto that much, but the concept is the same. It doesn't matter what market you trade in, the concept is the same. So back to the daily time frame. So this is how I use those rejection block. So if you're doing a breaker or something, you just have to understand what a breaker is in the first place, and you have to understand what a mitigation is. So if it's a mitigation block, I will just put it there and I just draw it. It's called mitigation block. So you might see this in some of my charts or some of my setups. So that is how I do that. Now, what more do we have? Okay, first let me move these levels. So now what have we learned so far? We've learned how to take the monthly, daily, weekly, daily, and 4-hour level using horizontal rate. We've also learned how to box this level to become even more important using a rejection block or rejection box, however you want to call it. Again, like I said, I'm not teaching exactly what these levels are, exactly how to use it. I'm just teaching you how to take the levels. So if you want to learn more about that, you come to us, join us, and then this is what we use every day. Like seriously, every day. If you go to my chart, you see, this is a balanced price range. All right, balanced price range right here. And price came, boom, down we went. So this was a classic Judah swing, PO3, power of 3, accumulation, manipulation, the rest, distribution right there. So we waited, price coming to our balance price range right there, and then we look for setup on a tiny lower time frame and we watch it, see what happened. Why? You must have a bias, you must have a narrative, you must have those things. So number one is bias, narrative, and your levels. Actually, I would say your levels first. If you don't have your levels, you lost. So then what is next? Yeah, well, OT. So if this was, you will see in my chart sometimes, a lot of the time actually, you see something like this, OT. So it's just a box. and we're telling you what is there. That's OT stands for optimal trade entry. Again, go to ICT, you will know what that means or how to use it. So basically, you know what a fair value gap is if it's for a daily, and then if it's a 4-hour fair value gap, it is there. And then if it is 15 minutes fair value gap, is there. You see different color, different text color, different title color, whatever you want to call it. So you know what you are doing or what time frame or which PDRA you're working with. Okay, so those are just a summary of how we do that. Now, what about the fib? Yes, the fib. Everybody loves a fib. So I have a custom fib here. This is for my OT level. So this, you go here, this is the settings. So you take your normal fib. First of all, this is, see, regular fib. Oh, it's like ages ago since I did this. So if you trade in retail, even some of our SMC smart money traders, they uses this. So, for example, you're doing that. How do you pull it again? Well, I don't remember. And then you have your regular fib level. Otherwise, you go to OT. So this is the settings for the OT. Come here, go to the settings, and these are the, you deactivate or untick everything else, and you have the 79, 705, 62, 1, and 0 levels on. So this is what is used. Then you save it. Save as OT, and then you do your fib also. So for my fib levels, go to settings. No, sorry. So these are the levels. So you can rewind this, rewatch it, so you know what you're working with. So that is that. If it's a bullish OT or bearish OT, that is how you draw it. I use it every day together with my higher time frame levels and PDAs, especially the higher time frame PDAs. So that is that. Basically what I use. So I've talked about horizontal array, I've talked about rectangle, I've talked about trend line. Oh, by the way, something I forgot. So this trend line, you customize it the same way like the other ones. So I have this, the template I have on this is I have equal high liquidity, equal low liquidity, ICT levels. If ICT mentions something, just like I have on this horizontal array, I equally have it on trend line. And then I have IOFED, institutional order flow entry drill. I have liquidity grab, that. So sometimes you see people put that. So it depends. You can do anything. You can put X. You see some people put XX or whatever. So that is what that means for me. And then I have SMT. Again, SMT is a concept that we use a lot. Concept by ICT is kind of like the smart money divergence. That's what it means. Smart money technique, smart money tool. So it's heavily, this shit is awesome. And then yeah, consequent encroachment. We'll talk about that in a while. Structural SR. To me, structural SR means structural support and resistance. So I can use it on the upside, I can use it on the downside. For example, this is a breakout structure, but at the same time it's a structural because it's a higher time frame. Structural break right here. So this automatically becomes a breaker. So a break of so this would be bearish breaker for me. Okay, so price is coming here. I'm expecting it to somewhat. I'll be planning to short. In addition to that, we have our daily order block right here together with this breaker. So if you're watching this, if AVAX come to this level, expect that. Now, what will be the area that I'll be looking at specifically? Now, actually, that is the correct one right there. Why is it the correct one? Because it is the swing point. It is the lowest. Short here, and then this is the lowest. So, and then there's this order block. So you will be looking at the beginning of this order block and 50% of it. So this is how I use my trend line. I use it to mark at OB. So you will see sometimes I have this, then it's OB. So if I'm going to mark this out, it will be something like this. So meaning OB, order block. Alternatively, you just draw it out fully like that. And then I will have DOB, daily order block. So if I go to a lower time frame, I know exactly what I'm looking at. So, but when I'm annotating live, I usually use this because I don't want too many things, too many lipstick, like my man ICT call it, on my chart. So that is how I use my trend line. So equal high liquidity, and then equal high liquidity. And then I also have equal low liquidity. It should be there somewhere. What is it? Equal low liquidity. So yeah. Now that we know how to take the basic levels, like I said, I did a part one of this with one of my Discord members on 101 mentorship. Everything I do is for free. So we make money trading. ICT taught us for free, and we're also sharing the same love to other people who are struggling. Now let's go to advanced setup, advanced levels. Okay, so this is what we call extra zones. So what you're looking at here is if we start with this and this. So basically, this is more, we call it extra zones. It's not because it's advanced, but you need to understand how it works. These extra levels are something, everything I'm saying here is by ICT, okay? So these extra levels are, how you want to call it? You see the wicks? The focus is the wicks, the fair value gaps, and the order blocks, okay? We start with the order block. This is another block right here. It's a fair value gap. It has a fair value gap. Structure is broken to the downside. So this you measure. We start, like I said, we start from the order blocks. So you measure the activated magnet, your order block, like, oh, sorry, like that. No, sorry. Uh, this is your order block. Daily order block. Okay. So 50% of this, which would be the middle, right there. ICT call this threshold, 50% threshold, I think. It's called 50% threshold right there. The If you're bearish, you're expecting price to go down. This first area is where you should be focusing on. A price should reject from the beginning of this order block and the first half. So this is what I use my Gann box for. ICT uses his fib. I don't know if he doesn't understand. I can easily use it. You can easily use your Gann box. So this is my Gann box settings. I don't know if I showed it before. So you go to the settings. Basically, I just deactivate everything except the 0, 1 and 0.5. So it's the top and then the halfway. Okay. That is how you get your threshold of your order block. So any order block, any time frame you are working with, you want to know the threshold, the 50% threshold. That is the middle, the midpoint of that. So you use this tool right there to measure it, like I did before. So even if we go to, let's say we go to, let's just choose something random. Gosh, this is some stupid shit right here. Okay. This, for example, of course, price came in, I took it. But yeah, any time frame, you just go there and then you just look, measure your order block, uh, draw out your order block, and then measure it. So that is what you use that stuff for. Going back to the daily time frame. So usually when I measure my order block, and then I could take something like this. Put in the middle. Like that. So I know which one, what it is. So you can customize it and call it 50% threshold or whatever you want to call it. Then you know what that is. I have to stress something. So this is something that just came to my attention. ICT talked about, I think a few days or a few weeks ago. You see, we always, there are levels within levels. What do I mean by that? This is an order block. This one right here. So we all often talking about the 50%. Let me use this Gann box again so you understand exactly what I'm talking about. First, right now we're focusing on just order block, okay? We'll talk about the other PDAs in a while. PDA means previous day array. We're talking about then we're referring to uh, breaker block, order block, fair value gaps, and all those sort of things. So this is the 50% level, half of it. But at the same time, there are other levels within this level. So inside this entire order block, which is made up of the wicks and the body, within here, the upper part, there you have to measure half of it. So this becomes another area, and this also becomes also another area. So let's just clone that, and you will see what I'm talking about. So basically, this yeah, it just got weirder. So if you're following ICT style, ICT teaching lately, this is technically what it boils down to. So this is a little bit more advanced because now you're just looking at a lot of things, okay? So inside this other block, it's not just the 50% that is important. These other areas is called the quadrants. This is not my term. ICT came up with it. I'm just rehashing what he said. They are called the quadrants. So I call this the lower quadrants, and the upper quadrants, and then the midpoints. It's not called mid quadrant, it's called 50% threshold. So basically what ICT said is that when prices come in, if it rejects within here, so it's rejecting from the first, or rather the lower quadrant, and then this is the second, third, and fourth quadrant if you take it one after the other. And then if it's coming from this side, this is the first. Okay, and then so these other ones are called quadrants. So you don't have to draw this out on your chart. You don't have to, but just take note of it. Every time you have another block, think of it in four. You can customize this, of course. So you have all those levels. So it's 25. In that case, you'll be looking at, you just put this level. Oh, no, no, not like that. Gosh, how do you do it? Yeah, I think this level, this level. Okay, so now you have 25% and 75%. So if you see, now you have it. Now you have all the levels. So you can customize it and have different and have all these levels there. So if you want to draw it out, I don't need that. At the same time, you can do the same with other things. So let's go back to the next thing we're going to measure. Okay, so remember this order block has 4 layers: the quadrants, the upper part, the lower part, and the mid quadrants, and then the threshold. Okay, so it has 4 parts to it. Now I'm going to take this out, just put them on the side. We're going to use it in a while. Now let's talk about the wicks. The wicks are as important as the order blocks itself, as an order block itself, or rather the wick of a candle. How many times have you seen price come into a certain area and then you're just wondering, okay, oh, but I didn't have a level over there. Oh, it's just rejected. And then you hear YouTube, social media and everything. Oh, okay, yeah, I just did that. It's a squeeze or some sort, or what they call it? What do they call it? Short squeeze and long squeeze and whatever squeezes they call it. So BS. Don't be a car, bro. Don't be a car. You're not going to the moon if you don't know how to risk price action. You're gonna get wrecked. So let's see what I'm talking about. So you see this wick right here. You do the same like you did to the other block. You take this, you measure it. Okay, before I continue, remember how I said you customize your horizontal array and your tools. Basically, if you're going to take levels, you have to do it correctly. So let's see what I have here. If you go to templates, I have, what you want to do is this. You want to have for 0.5%. I don't use that often, but from before, I have for my 4 hour, from a daily and monthly and weekly. I kind of have for regular trading hour, but I don't really use it. Range, point of control, range, high volume node. So, but what we're going to focus on today is these 3 things: consequent encroachment of daily wick, CE of daily order block. This is not, I just call it CE of daily order block because I don't want to write 50% threshold. That is too long. It's too wordy for me. I just put CE. It means the midpoint of that order block, like I said before. So call yours whatever you want to call it. I know what I mean by mine. And then CE of old daily wick and CE of weekly wick. So I'm just going to do that. And I just daily week. As you can see, there are different colors and the titles are different colors also. It makes my chart aesthetically pleasing. So you just have to go to the customize it the way you want and save it the way you want. If you want it on the top, if you want it on the bottom. And sometimes my if they're too close to each other, you just go here, do this, and then you can change where you want to put it. Bottom, so it can be clearer. You do that. So what you want is this. You want to take the midpoint of this. So in this case, we're on a daily time frame. It will be consequent encroachment of. Now this is old. This is like in the past. Okay. So it'll be consequent encroachment of old. OD means old daily. CE means consequent encroachment. And of course, the week. So I know when I'm in my 5 minutes time frame, I know what level I'm working around or working with. The idea is that when price comes to this area, it might reject from it. So if you're looking at this is pound USD GU, now it's already taking buy side on a daily time frame. It rejected from here. You want to tell me what this is? Where it rejected from? The lower quadrant. Although it did tap into the upper one a little bit, you see. So you can say it's a consequent encroachment of a consequent encroachment, something like that. Okay. So if you were watching this, because if you know this, then you should also keep an eye on these extra levels. Although I didn't mark it out, I usually don't mark this. It's too much. I just wait for it to come here or something. But if you were looking at this, you just go to lower time frame and apply your 2022 model. All right. So that is how you take the levels for that. Now, if you look, okay, let's see what happened here. You see this week. What do we have there? So price came. This is the consequent encroachment, the CE of this week on this day, Friday. What day is that? 13th January. Was it 13th? Yeah, Friday 13th January. So on this day, you had this. So when price drops down into there, you know what to do. Again, you apply your model. Most people will be waiting for this low to be taken out because they are not aware of this. So they miss out on that opportunity heavily. So this is why it's important to take these levels. So that is how you take the consequent encroachment of the daily week, and you do the same on the weekly. So you create a template for all of them. So if it's old, and then you call it. Where I use old is different. Okay. I'm going to show you another thing called implied FEG. First, let's go here. So this is my ES These are my the indicators I use, but it's not about that right now. So this I have a file here called extra zones. So this is my higher time frame levels. Like I've showed you guys before, this is the trade, one of the trades we took. Um, High time frame levels, and then I have other one called extra zones. This is where the magic happens most of the time. So if you go on a daily level, daily time frame, sorry, this is an example of what I mark on this extra zone on that file, that folder rather. Sorry, it's late. I'm tired, but I have to finish this video. If you look at what happened here this week, this was a whipsaw. It's go to a lower time frame. I believe it just did all kinds of crazy shit. And then mark this out. Price came, check out this buy side liquidity and tapped into this. If you look closely, right there. So having these levels on your charts is extremely important. So I also mark this one here. So I mark all the relevant ones that I need. Okay, I mark out my other block, and then I mark out daily volume imbalance and another daily volume imbalance level, and then I have a consequent encroachment inside a volume imbalance. I didn't mark the CE out for these ones. See how we were able to use this to short. Again, I mark this out. So this is where I use the one called consequent encroachment old daily wick. Okay, so what this does is this one, this is an older one. If you see this happening on the left, you mark it out. Nice old. And then there is another wick here, and then you mark it out. The space between this one and this candle, put a box there. So I have a custom box also called, I believe, IFVG. So this is also a recent teaching by ICT. It means implied fair value gap in between two wicks crossing uh, opposite of each other. So you draw it out, see what happened. We trade back into it, and then we dumped. So if you go to lower time frame, look for your entries and all that business. So that is just an example. As you can see here, we tapped into this. But I also took out sell side. Looking at this trade, I was hoping that this entire sell side liquidity was going to be purged, but we only took out a few, and then price reversed. So it was after price started reversing from this CE that I started looking for setup. Now, like I said, not all setup is a winner. And if the market looks wonky, I don't trade. We don't trade. We just backtest and we tape read and we annotate and we do all kinds of stuff. So we're here many hours a day. So not just because we're here taking all this, you see all this like, oh, those guys are really killing it. Yeah, we are killing it, but we do take losses and we do a lot of annotations. So like ICT said, look for the easy setups, bread and butter. But if you know what you're doing, you can catch a lot of setup, especially knowing these things. This was not in the 2022 model. It's something ICT recently started talking about. So we are implementing it already. So you can just do this on, you can still do it on a lower time frame. So let's hunt for some more. Oh yeah, of course. Here, let's go to a daily time frame. This is exactly what I was talking about. So the CE of this and the CE of this, actually, because this is an older week, this should be called CE old daily week. Yeah, you see, now it changed. So that when I'm on a 15 minutes or 2 minutes time frame, I know this is a old daily week and this is a more recent week. So when price comes into this range later, I should expect something because this happened between this and this. So it's almost the same as fair value gap. It's a three candle formation. This is also a three candle formation. 2 weeks and one body or whatever is in between that. So that's how it's formed. Now let's hunt for another one. Yeah, on the 4 hour time frame. If you look here, if you look at this candle, you could see how price rejected from consequent encroachments 2 times here and here. If you're looking at this, you probably be waiting for this low to be taken out, but it never did. But if you had both levels, this low on your chart, and you also have and you know you are expecting it to be taken, but you have the consequent encroachment. Now, if price doesn't touch this and it touches this, you look for your setup. Off you go. So knowing these things, you will have tons of setups, tons of setups. Not that you have to take all of them though. So again, this is another example. If you measure, if you measure this and this, and then you have the consequent encroachment, or rather, sorry, implied fair value gap right there. So the same thing you do to the fair value gap also itself. So this is a fair value gap. This is a fair value gap, for example. 50% of that, or the midpoint. Of course, we broke it. So that is how I take my advanced levels. So once again, I have it on another file. Okay, so you don't have this and this, and then it just becomes too much. And if you don't know what you're looking at, you get confused. Oh, okay, is it daily or what am I looking at? Of course, you have the titles around here, but it could become really, really messy sometimes. Normally, I will have use this. So I have 4 time frames on the same chart, one for daily, one for 1 hour, and then 15 minutes, and then 5 minutes for my entries. So I think I've covered most parts. So what have we learned today? You learn how to take levels, advanced levels, and how to customize your instrument so you can take these levels and plot them on your chart. So this is oh yeah, exactly. This is a good example of how it played out on it a few days ago. So this is a consequent encroachment of this of this week, and price came right there, and off it goes. So I was sharing this on Twitter, I think, and on the Discord yesterday or so. These are the areas where I was looking to long from or to buy from if price touches it. So I was expecting this breaker to act as a trampoline. So this entire area is an OT, the higher time frame OT, which is again measure from here to here. So it falls within this range. So because it's a large range, so I have to section it. If it comes here, all right, I look for setup. If it comes here, I look for setup. This is cool. You already press here, and this one, this is a breaker, and then we have a market structure, and then we have a fair value gap, and then if you see what I have written here, upper quadrant. So this OT has been measured into 4. So we have the upper quadrant here, and then we have the second one. This is the midpoint, and then we have the lower quadrant. So the lower quadrant has this fair value gap, daily fair value gap, falls into the lower quadrant, and a bullish, a balanced price range. So again, if you don't know what these terms are or how to use it, go study ICT or join us, and then you can see how we use it every day. I mean, this is what we do every day, and so yeah, the same thing can be found on Bitcoin, any pair you trade in. So I think I've covered most of the levels taken that I need to. So if you have any question, you just get to us on Discord, and yeah, we'll have everything answered. So I've been doing this now for like, gosh, more than 1 hour, 1 hour 20 minutes. I think it's time I call it a day. All right, guys, bye for now.